Property Patriot, you are cleared hot.
In this episode of the Aim High podcast, I'm speaking with Austin Zelan. Austin is a serial entrepreneur who's diversified his investment portfolio beyond real estate into areas like Bitcoin mining, exotic car rentals, and private jet charters. Austin shares his journey from exploring various career paths in college to becoming a successful investor by leveraging different opportunities and learning from his failures. He emphasizes the importance of taking risks, diversifying investments, and surrounding himself with the successful people to accelerate his growth. Austin's story is a testament to building a robust financial position and avoiding the return to corporate life. He showcases the significance of strategic investment and entrepreneurship, where we provide real estate investors with the tools to achieve generational wealth. This is the Aim High Podcast, episode 73. Hello, everyone, and welcome to the Aim High Podcast. I'm your host, Bud Evans, and today I am here with Austin Zelan. Austin, we're going to take this in a different direction. Normally, we're a real estate podcast, but I want to show people what they can do and how you actually wound up in real estate, because it's quite an impressive story.
Yeah, thank you. I'm excited to share. Real estate is definitely a big part of my portfolio, but I also didn't start there. So I'm happy to share that journey and when it started to make sense for me finally.
Yeah, if you wouldn't mind just running me through like where you started, because you're a big deal.
Thanks, man. Thank you. So I kind of tried everything. Honestly, I found that I was talented at several different things at once. And so even back in college, I didn't really know where I wanted to take it. At first, I wanted to be a doctor, then I wanted to be this, then I wanted to be that. But eventually I settled on, okay, let me get a general business degree and see what I can do with that. Now, at the same time, I found out that there was a program in my university that I could just take night classes, meaning my whole day was free. So I was like, okay, why don't I start doing something? I actually started out doing like some network marketing for a very brief amount of time, but that experience got me a marketing job at a startup. Worked at the startup for a little bit and used that experience to get into Microsoft. Now, this whole time, I was also investing on the side. So I was day trading and doing different things to make money outside of my job. And eventually that really took off, especially once I launched my trading software. That was like my first business move. Now, because I was making more money outside of Microsoft, I was able to leave that and focus fully on my investments. But I came to a realization pretty quickly that if I made one mistake or something got changed, like regulations changed or something got banned or removed from the US, or we were like, if anything changed really, I would be only one step away from going back to Microsoft or going back to some corporate job. And that scared me so bad. I was like, oh man, I should probably diversify a little bit and build like a little hedge around myself or something to protect me from having to go back to corporate. And I really saw it visually as like I was in this investor status and I was building a financial moat around myself to protect myself from having to leave this place that I like to be. So I started investing into literally anything that I could find that made even the slightest sense. And that started with like oil wells and Bitcoin miners, mined some other coins down in Arizona and different places of the US. I started a bunch of online stores, Walmart, Amazon, Shopify, Facebook Marketplace, all of them. I did just a little bit of real estate at that point. And also we went into like exotic car rentals and private jet charters and just anything that made sense. And over time, some of them dropped off because they just didn't work. But I've built this portfolio now of stuff that has worked and that has allowed me to stay as a full-time investor. And now I really see the value in real estate as a long-term play for myself. So I needed to quickly replace the income at the beginning. So I was focused on more high-risk stuff. But as far as long-term value, it's very hard to compete with real estate.
Austin, I have to say, there are a lot of flippers, a lot of wholesalers that get into real estate, but very rarely will you ever find a billionaire wholesaler or flipper. For the most part, you have to have buy and hold assets. So I'm more curious about what brought you down the line, because the amount of experience that you had before you ever thought about getting into real estate is opposite exactly what I teach, which is jump into real estate, get a bunch of stuff going on, and then pull yourself out of the game, replace yourself in the business, and then move on to other things. How did that work out for you with the Bitcoin mining and the airplanes and the exotic cars? Tell me how you started each one of those businesses up, if you don't mind.
Yeah, for sure. So for me, I was in a position where I had just left my job, so I didn't have a W-2 to buy real estate and try and use that as income. So I really had to buy it as an investor. And that meant 20% down minimum. So in order for me to buy something decent, at least in the places that I was looking, I had to come up with at least 100,000, 150,000. So I didn't really want to start off my investment journey doing something like this. Now, I knew about wholesaling and flipping and stuff like that. Flipping does take some cash. Maybe there are some ways to do it with little cash, but for the most part, it does take a lot of money. And if you make mistakes, which I probably would have as my first time, I would have needed more money. So my option was like, okay, I can wholesale. And I think I actually even took a course on wholesaling because I understand the process, but it just didn't really click with me. So what I did was I used that money to invest into as many different things instead of all in on one thing. Because my logic was, if I really want the best chance of success, I don't want to go all in on one thing and hope it works out. I would rather separate that investment amount into 5 or 10 different investments. And if just 1 or 2 of them work out, as long as the wins are much bigger than the potential losses, I would still be on top, and I would also learn which investments work. So next time I could just double down on those things. It first started out with Bitcoin mining. It went really well, actually. That was like way back in the day. That was before even like the pandemic and everything. We were mining Bitcoin. The oil wells, same thing also back then. I would say some of the more successful investments were the exotic cars and the planes. But to get started in those, I had the choice between putting $20,000 down on a Lamborghini and renting it for $1,500 a day, or potentially putting down 150,000 on a house and maybe making a few $1,000s a month. So it was, the cash on cash return made a lot more sense with something like exotic cars. Yes, it's higher risk. Yes, you have things that could happen to it. But if I wanted to initially build up some capital and then buy real estate with it, I had to go that route. And I was willing to take the risk. I was very young and luckily it worked out. But then I started working into more like larger scale investments. So I started buying equity in some companies. I started buying equity in planes. What we do with the airplanes is a fractional ownership model. So we bring together investors, 50, 100K each. You really, to get like a really beginner jet, you only need about $1 million down. So you put $1 million down, you could have 10 investors at 100K each, and they would each own approximately 10% of it. It would be a $4 to $5 million jet. They put $1 million down, we get it financed, and they're doing maybe like $250,000 to $400,000 a year net. So it's a great return. And on top of that, you're still paying off the asset every month because we're servicing the debt. And it does actually get more interesting than that, where once the plane is paid off, we could sell it. Now we have $5 million cash, and we can put that as a 20% down payment on a $25 million jet. So everybody that was in the first one gets grandfathered into the next one. Now, instead of owning 10% of a $5 million jet, you own 10% of a $25 million jet.
Nice.
So the math really works out, especially in a long-term model. And I like the similarities between private jets and real estate because it is a physical asset. You don't have some crazy teenager driving your car like you do with exotic cars. It's professional pilots. Everything is covered by insurance. Most of the time we're buying them once they've depreciated to a certain point. That way they're not really depreciating much more after that. The one benefit you have over jets with real estate is that it tends to appreciate overall. But we have had that happen with jets. If they're in high demand and we have a model that people like, they do appreciate for sure.
Right. How did you raise the capital in order to buy it? Did you use your personal funds, or did you go out and find corporate sponsors or private money?
So we just partnered up with people. We did like a JV. So we had a couple people come together. We all put the money down and we financed it.
There's a lot of maintenance that comes along with that. Obviously, you factored all that in. So what was your actual ROI on your first jet?
The first one was around 30% a year. So that one, it didn't have a ton of maintenance, but we do set aside money for maintenance every month. So we have basically 2 things securing us from potential huge maintenance costs. Number one is every hour that the plane flies, we set aside some money for general maintenance costs. Whether we use it or not, it's set aside. Now, it builds up. When we actually do need something, it's applied towards the maintenance. Then secondly, we have like engine overhaul reserves. Maybe you know what that is, but basically every 4,000 hours or so, the engines have to be rebuilt. And so we set aside money again every single hour because we have engine programs on them. We set aside money to overhaul those engines. And then when that time comes, we never have to do a capital call or anything like that. And we've actually been profitable every single month with every single jet. So we've never lost money.
Outstanding model. I love the fact that I get to talk to you simply because you're a serial entrepreneur and have been. So let's talk about the exotic cars, because I'm sure that there are a lot of people who are sitting there going, I don't know how profitable that is, but a couple of things. First, it's got to be, otherwise you wouldn't be doing it. Second, you get to try some really cool automobiles for every once in a while.
Yeah, definitely. So one caveat that I would say with this is you have to make sure that you've got everything really solid and buttoned up, because there are operators out there that are shady and they will do stuff. They've even done stuff that has screwed me. A car gets given to somebody who didn't sign the waiver or didn't provide proof of insurance or something like that. And eventually it comes back to you and you have to pay whatever if the car gets crashed. Right. So that is one negative aspect of it. Now, the second thing is you have to have insurance coverage yourself on the car. If you do, you're protected for the most part. Thirdly, it's best if you just buy the car cash, because if you don't have any like stipulations with the financing company, it can't get taken away. Because I've seen some crazy stuff happen in this industry. And a lot of guys, they're just like leasing cars and then releasing them through a rental company. So the operator makes a huge difference, making sure that they're doing everything properly and that you're protecting yourself on your side as well. But the math does work out really nicely. As an example, it's not like a prediction or projection or anything, but the ballpark figures that I use is I can buy a Lambo, like the last Lambo that I bought, I put $20,000 down on. So if I put $20,000 down, my monthly payment is, I think, $4,500 on it, something like that. So $4,500 a month. That thing rents for $1,800 a day. It's a Urus. So if I rented for 10 days a month, which is only a third of the month, I'm making $18,000. Now I'm going to have a 50-50 split with the operator. Usually, sometimes they'll do 60-40, 70-30, depending. And even if I just keep half, I made $9,000. I paid my $4,500 for the car. I get to drive the car for 20 days of the month, and I pocketed another $4,500. Right. So even if I was just breaking even every month, it would still make sense because I'm making my car payments. And after a certain amount of time, that car is going to be paid off. And again, we're buying these cars at a certain point in the depreciation curve where they're not going down much further. So if I bought the car for, I think that one I bought for $250,000 or something, it's not going to go down much further. I could probably sell it in a year or two for $220,000, $230,000, because you have something very unique that happens with exotic cars as opposed to luxury cars. My BMW in the last 2 years, it's like it's worse right now. It just plummeted in value because it's a luxury car. And those are the people that are really getting screwed in the whole depreciation, inflation thing. But exotic car owners, a lot of times they hold their value. And there's proof of that. If you go and look at like car websites where you can buy cars, if you look at cars that are in good condition, something like a Lamborghini Huracan, for example, you'll see they depreciate from about 300,000 to maybe 200,000 or so, 220, and then they don't really go down past that. Once it settles at that 200K, the demand is so high below 200K that as soon as it dips below, somebody just picks it up. It's just unheard of to buy one below that value. So my logic is if I can find one that's already around that value, is in good condition or decent condition, and the amount of wear that I'm going to put on it and miles that I'm going to put on it isn't going to significantly change that, I could probably sell it for right around what I bought it for. So if I can use that money coming in, I'm just breaking even from the rentals and paying off the car. At the end of the day, I'm going to have $200,000 in my little piggy bank called a Lambo. And once I sell it, I'll have that in cash. So of course, I haven't had many months where I break even. If it's like really slow or rainy or snowy or whatever, it does get a little slower. But for the most part, if you have a good operator, you should be doing at least 10K a month, 15K a month. We've had months where 20, 25K a month is not unusual.
Yeah, we're not talking Toro here. So what kind of operator are you talking about?
So it would just be an exotic car rental place. There are many of them. Many of them are not good, but As part of what I do is now I educate people on how to do this. So I have like my list of trusted vendors that I work with all over the country. And actually, we've started our own exotic car rental company as well because we were unhappy with some things with other vendors. And people have the choice now. If they want to work with that vendor, some people love them, some people don't. So we gave people another option. And we have locations now, actually in New York, and we're launching Scottsdale and Tampa right now.
Nice.
So the idea is people can franchise from us, use our model. We have a way to get them cars, and then they're able to rent out other people's cars. Or if they just want to be a participant, they could buy their car and then give it to one of our operators, and it'll be run within our organization.
Awesome.
Yep.
Now, so we've gone through a couple of different ventures that you've gotten into that have been profitable and successful. Give me an example of something that you've done, because one of the best experiences I've ever had have been the ventures that failed miserably.
Mm-hmm.
So what is something that you could provide from your history that shows other people that, you know what? Yeah, you make mistakes too.
Oh, yeah, definitely. I've made a lot of mistakes. Actually, somebody asked me the other day, I was speaking at an event, and they're like, how come you're 27 years old, but you have as much experience as a 72-year-old? And I was like, that's because I made as many mistakes as a 72-year-old. I've definitely made more mistakes than wins, but they did teach me a lot. And I would say every single one of my online stores, first of all, miserable failure. And they're pretty expensive. You'll pay $50K to get a store set up, and somebody will set up an online store and source products and run it for you. But I haven't had any success with that at all whatsoever. I've had some failures with the exotic cars, again, working with an operator who didn't check all the boxes, and I've had some losses there that happened. I've had some stuff happen with Airbnb arbitrage. For the most part, it was good, but I did do some arbitrage where it just didn't pan out as expected, or one recently we just got kicked out of because the HOA told us that we're not allowed to Airbnb there, even though the owner said we could, and it was just like this whole thing.
Right.
But yeah, a lot of interesting things happening in this space, and I'm trying to think of some more like big failures. I would say, yeah, the biggest ones were definitely the online stores. And of course, with any investment, if you're too risky with it, you risk losing. So I would just say for people who are maybe considering different investments, just use that strategy that I gave. Split it up into multiple investments, because you never know which one is going to work out. It doesn't matter how good the numbers are. It doesn't matter how good everything pans out. Like, you have to diversify into different things, find something that works, and then double down on that thing. Because if you just do one by one, your first 3, 4, 5 investments could be failures, and then you'll never invest again. And luckily, I was able to invest into a bunch at the same time. So I saw the winners at the same time as I saw the losers. So I wasn't discouraged.
Let's take a quick break.
Are you looking to fine-tune your real estate journey? Welcome to the REI Roundtable, your gateway to real estate success. Led by industry veterans Bud Evans and Jen Josie, this accountability group is dedicated to helping real estate investors like you smash through your annual goals. With our unique approach, we break down your big ambitions into manageable, weekly, bite-sized targets, ensuring you stay on track and motivated. Whether you're looking to expand your portfolio, increase your returns, or simply get more disciplined in your investment journey, the REI Roundtable is here to guide you every step of the way. Join us and let's turn those real estate dreams into concrete achievements. Your path to real estate mastery starts here. Check the link in the description to sign up for the REI Roundtable now. If you're not failing, you're not learning, right? So having those couple that really kick you in the butt really keeps you moving forward.
Yeah, absolutely. Yeah, and it's always a valuable lesson. And sometimes it's not obvious. You got to dig for it a little bit. But once you learn the lesson in that investment, you can apply it to your whole portfolio. And that's the type of stuff I would say failures are actually more valuable than wins, because you get to benefit from that failure for the rest of your life.
Yeah.
As opposed to a win, it's okay, I picked the right investment and I made a bunch of money one year, and now what? Okay, I have to find another investment. But with the loss, you learn something that's going to guide you for the rest of your life.
Right. Great point. Now let's roll into, now you've got all these successful companies. What are you investing in specifically in the real estate industry?
For the most part right now, I own like companies that do real estate. So for me, that's the most interesting. And my whole portfolio has shifted into like acquisition and mergers and stuff like that because I've realized that I don't like as much as I like being a CEO, I also don't like it.
Yeah.
So I it's not for me. I would like to be the strategic owner and come from that perspective. And so I buy into companies that are doing real estate. Like right now, one of my favorite projects is a company up in New York. It's actually the same guy that we did the exotic car rentals franchise with. So we set that up, but he also has a big real estate development project. So we're doing like ultra luxury cabins in the Poconos, I think, somewhere up there in those mountains in New York.
Catskills or
Yeah, maybe Catskills. Is Poconos Pennsylvania?
Out, right?
Yeah. Anyways, it's up there somewhere. So we're building like ultra luxury cabins, like multi-million dollar cabins for people that are coming from the city, Manhattan. It's like a 3 or 4 hour drive, and they can stay in a super nice cabin. So that's one development. We also have a big development in Birmingham, Alabama. And yeah, so I like to be a part of those projects, but I don't really want to be involved too much. So I just invest. I own equity in this overall company that owns all these other projects. So that's my biggest involvement in real estate right now. And then, of course, I have like my personal rentals and stuff like that. A little bit of Airbnb arbitrage, just like 2 properties. But other than that, I have like my houses that I own and I rent out.
Listen, I had you on and I thank you because we're not done yet. We've got the questions and all, but seriously, I wanted to show, and the reason that I actually asked you to be on was what a serial entrepreneur can do and how you can develop other businesses and still find your way into this industry and create a position where you have assets that are appreciating.
Mm-hmm.
I'm going to ask you, what is one thing that you learned as your wealth increased?
I'd say one big thing that I learned is that you have to always think bigger as your wealth increases. And what I mean by that is sometimes we get comfortable with one type of investment. Like I could have 100 exotic cars right now, or I could have come to the realization, which I did, is that why don't I just invest into something that's a little bit less accessible to people? First of all, there's going to be less competition there. But second of all, if I can manage to figure that out, I can make money at a larger scale. So that went from exotic cars to jets and now businesses. And so that was the transition for me. And it also levels up your circle. So I was in a certain community, if you will, of investors, entrepreneurs when I was investing into exotic cars. But when I started investing into jets, man, that like really opened a lot of doors because people were like, oh, now you're playing at this level. And then after jets, I went into businesses and they're like, oh, now you're playing at this level. And people will just reach out to me, like you get new business opportunities. And it might seem a little scary to make that jump because you're comfortable with that smaller thing, but the larger thing opens the bigger doors.
Mm-hmm. Completely understandable. That's awesome, man. Thank you very much for putting that out there. But let's go on to the Soaring 4. These are the same 4 questions that may help someone who is just starting out achieve new heights. So what is the thing that keeps you motivated?
For me, I have certain financial goals, but I'm also involved with several nonprofits where we do like leadership education and youth development and stuff like that. I work with John Maxwell and his leadership programs and stuff. So for me, that's what I'm really passionate about. And I want to set my businesses up in a way where I can be super involved with all those things, where I can travel with them. We've traveled internationally with John, and I have some stuff here locally that I work on in Seattle. And I'd love to dedicate the majority of my time to that, which I do. I dedicate a lot of time there right now. But I think if I can set up my businesses in a way where I have somebody managing my whole portfolio and I have minimal involvement, I could do a lot more things over here.
It's funny, isn't it? You're like, oh, I'm going to work towards this. And then when I get there, it's okay, I can stop. No, I can't. I got to do something. You continue on.
Definitely.
All right. What is one thing that you learned that completely changed your mindset?
I learned the impact of having the right people around you. And sometimes the thing is, it's very deceiving. I know, like, I've heard it a million times, like, your circle is your whatever. Like, if you are surrounded with 5 millionaires, you'll be the 6th one, all that stuff. I've heard it a million times, but I came to a real realization of that within the last, like, year or two. because I thought I was surrounding myself with successful people, but I really wasn't. And they were like mildly successful, but I didn't realize like it has a huge impact just because of the frame of mind that they think through problems with. So if you're faced with a problem and you're worth 1 or 2 million, you're going to think about it differently than somebody who's worth 100 million. And just being able to see how those people think, like I spend hundreds of thousands of dollars to be around people like that, just to learn a little bit about their thought process. Because if I can figure out their problem solving process, I can solve my problems in the same way that they do. And that means I will get to where they're at much faster. And that's accelerated me in business more than anything.
Network is your net worth, and the 5 people you hang around with. I got you. And that's right. Nailed it. What tools do you use to keep yourself on track?
For me, it's just sticking to a schedule, really. I don't like to get super high tech because sometimes I see them as a crutch. It's, oh no, my app didn't work today. I'm behind schedule. No, the way I see it is I use like time blocking apps, and I try to be as efficient as I possibly can with my time. And I have certain times of the day set aside for certain things, and I don't deviate from that. And that keeps me on track more than anything. And then it's just like learning how to pivot very quickly. If you can learn how to pivot from one thing to the next very quickly, you'll be on time and you'll get things done.
Awesome. Austin, if you had to start all over again, what's one thing you would change?
I would just take more risk because I think that I was so scared of going back to corporate that I took things a little bit conservatively. And although I did diversify into many things, I think if I just doubled every investment that I had, I would be in a much better position than I am right now.
All right. Austin, if somebody wanted to reach out to you, how would they do that?
The best way is through Instagram. It's at Austin Zelan, AUSTINZELAN. I post most of my stuff there. It's a lifestyle page, but you'll see some business sprinkled in here and there. But the real reason that I'm building my business is to have the lifestyle that can support the nonprofit projects and all the things that I'm doing there. So that's what you'll see there.
Fantastic. All right. Austin Zelan, thank you very much for being on. I appreciate your time.
Awesome. Thank you. Thank you.
Thanks for being a part of the Aim High community. Your support drives us to create valuable content, and we can't wait to see your success stories in real estate investing. Till next time, aim high, never stop learning. Bud Evans, signing off. We'll see you soon.